Level 1. The analyst. You're 22 years old. You just graduated. You spent the last 4 months interviewing, undergraduate degree, maybe some banking experience, resumes to 50 firms, callbacks on 15. You practiced modeling for 6 weeks straight. You built LBOs on your laptop at 2 a.m. You memorized industry multiples. You learned to talk about IRR. You got the offer. Now you're here. The office is different from banking, smaller, less obvious hierarchy. You're the most junior, but somehow closer to the actual money decisions. Your job is financial models and due diligence. You build the models. You dig into company documents. You find the things that matter. You prepare memos for senior people. They read them in meetings. They don't mention your name. The memo becomes their insight. You're 22. You make $100,000 base. Bonus brings it to maybe $150,000. The number felt enormous until you started the job. Your coworkers all made similar money before this. Everyone here went through something. Everyone survived something. You work 65 hours a week on average, sometimes 80. Deal months are worse. You eat dinner alone at your desk. The firm pays for it if you're there past 7 p.m. You have an apartment that exists but doesn't matter. You come home to sleep. Sometimes you sleep in the office. You keep a shirt in your locker for this reason. 2 years. That's what everyone tells you. 2 years, and you either get into a top MBA program or you exit. Everyone's got the plan. Everyone's the same. You get your first taste of real work. Your deal closes. Your models predicted the outcomes with 80% accuracy. That matters to nobody but you. Your deal makes money. That matters to everyone. Level 2, the associate. You survived analyst. That means something, right? You're either coming back with your MBA or you came up from within. Either way, you're here. You're 25, you make $150,000 base. Total comp clears $300,000 in a normal year. The number feels different now. You understand what it buys and doesn't buy. Your responsibility shifted. You're not just building models anymore. You're sourcing deals. You're talking to brokers. You're on calls with investment bankers, telling them what you want to buy. You still model everything. But now the models matter because you're telling people what to bid. Your decisions affect the company's actual strategy. You have an analyst now. Their name is probably Alex. They remind you of yourself 2 years ago. Nervous, careful, asking too many questions. You were them. Now you send them messages at midnight about the model needing another scenario. You give them the feedback they don't want to hear. You see yourself in their face when you tell them to redo it. You push work down. They execute. You check their work. The associate above you checks your work. The principal checks everyone's work. The structure is obvious now. You're in it. You understand the game. The weekends used to be yours. Now, a text on Saturday about a potential acquisition means Monday you're in a conference room. Deal sourcing has no schedule. It just happens. You miss events. You reschedule dinners. Your friends stop inviting you to things with firm start times. It's easier that way. You close your first deal as the real owner of the sourcing. You brought the opportunity. You built the model. You presented the thesis. Your name goes on the investment memo. That feels like something until the fund performs and everyone credits the principal who sold it. But, the analysts know the deal was yours. Level 3, the senior associate. You've been here 5 years now. Analyst plus associate plus time. Some people get promoted based on having the MBA. Some people get promoted based on performance. You got promoted based on both. You're 27, you make $200,000 base. Bonus can push you to $350,000. That's real money. You feel it differently than the associate below. You feels their money. It's not excitement anymore. It's stability. But stability is its own kind of trap because the more you have, the harder it gets to leave. You're doing different work now. You're not just executing deals. You're originating them. You call bankers. You call corporate development contacts. You have relationships that matter. You wine and dine CFOs at companies you want to buy. You present investment theses. You tell senior executives why your firm is the best owner for their business. You're good at it. You didn't know you would be. You didn't know you could sell until you had to. Now it's easy. Too easy. You manage 2 analysts and the associates beneath them. That's 5 people doing what you tell them to do. You make more because you make them move. That's the promotion, not the money. The leverage. You understand that now. Your deal sourcing has warmed conversations with 5 companies. 3 of them are serious. That's how it works. You touch dozens to find 5 that matter. You start one deal and it takes 3 months to close. During that time, you're sourcing the next one. During that, you're monitoring the current portfolio. During that, you're managing the team. You don't sleep much. You got better at functioning on 4 hours. Your body adapted. That should concern you. You notice that it doesn't. The money is good. The deal your team closed makes significant returns. Your carry hasn't vested yet. You don't have carry. Associates don't get carry. That's the next level. That's the line you're walking toward. Everyone tells you that's why you're grinding. Carry. Real carry on real money. Level 4, the vice president. You made it past the wall. Most associates don't. You're 30. Base is $250,000. Bonus clears $400,000 in a strong year. But the bonus is the appetizer. You finally got carry, small carry, a tiny percentage of profits, but real carry, real skin in the game. When a deal performs, you benefit. When it doesn't, you lose. That alignment is everything. It changes how you think about decisions. You feel it in your chest when a deal is underperforming. That's the carry talking. That's the first time your money is on the line. You originate more deals now. You've become the relationship person. Bankers call you. Corporate development officers call you with opportunities before they call the principals. You have a reputation. 3 deals in the last 2 years, all of them performing. You're known for picking winners. That matters more than anything. You manage a team now. 2 analysts, 2 associates under you. You deploy them to deals. You know their strengths and weaknesses. You know who will stay until 6 a.m. without complaining and who will push back. You manage their careers. You tell them what to improve. They know you're honest. You're hard, but you push them where you were at their level. You're actively investing in the next generation because you were invested in once. You're on the investment committee now. You present deals. You defend them. You hear senior people poke holes in your investment thesis. You defend harder. You learn to live with the fact that sometimes you're wrong. Carry will eventually be substantial. Right now, it's a promise. You're still trading time for money. Trades happen every second you're working. An IPO exit hits. Your carry vests partially. The number is bigger than you expected. 6 figures from that deal alone. That money doesn't feel like salary. It feels different. Like you finally own something. Like the sacrifice is converting to ownership. The principal above you tells you not to get excited. More deals are coming, bigger ones, higher risk. You'll need capital. You'll need to invest in your funds. That means some of what you make goes back in. That's the deal. You understand. You're building something. Level 5, the director. Partnership is tangible now. You're not there yet, but you see the path. You're 34. Base is $350,000. Bonus brings it to $600,000. But carry is the number that matters. Your carry from 3 deals is in the millions. 1 deal is a unicorn. Your carry from that deal will eventually pay for your house. Probably all the houses. You close one fund and open another. Capital raising is starting to touch your world. You still do deals, but you spend more time talking to institutional investors, limited partners, pensions, insurance companies, endowments. They write $100 million checks. They want to meet you. They want to know if you can pick winners. You have a track record. You show them. They write the checks. You feel the weight of that differently than anything before. Those checks by your firm's ability to deploy capital. Your ability to deploy capital. Your ability to make more deals, to make more carry. Your kids are in school now. You miss pickup sometimes because of a deal call. You make pickup when you can. You tell yourself it's worth it. You're building something that will outlast you. Your oldest asks what you do. You try to explain it in words a child understands. You don't fully succeed. You tell them you help build companies. That's close enough. You manage a larger team now. 4 analysts, 3 associates, 1 VP under you. You're middle management. You're the translator between the principals and the executors. You hear what the partners want. You translate it to the team. You hear what the team can do. You translate it to the partners. You're exhausted sometimes from the translation alone. You originate significant deals now. 2 major transactions in 1 year. The market is hot. Capital is flowing. Multiples are high. You're skeptical, but you deploy anyway. You wonder if you're part of a bubble. Everyone wonders. Nobody stops. The carry is compounding. A large exit vests. The number hits your account, 7 figures this cycle. You invest half of it into the new fund. You keep half. Your net worth is expanding exponentially now. You understand that this money isn't really yours yet. It's only yours if the returns sustain, if the portfolio companies keep performing, if the next deals work. The pressure is different at this level. The money is real now. Level 6, the managing director. Partnership comes through. Finally, you're 40. You made it. Your base is $500,000. Bonus is discretionary. It ranges from $300,000 to $1.2 million, depending on fund performance and personal contribution. But carry is the actual compensation. Your carry from the last fund was 8 figures. The current fund is larger. Your carry is larger. You're thinking in millions now, not thousands. The word wealth doesn't feel exaggerated anymore. You originate most of the significant deals. You're the relationship. The bankers call you. The corporate development folks call you. You don't pitch yourself anymore. You don't need to. You're known. You've made money for LPs. That's the best business card. You recruit for the firm now. You hire the next VPs. You mentor the next directors. You feel responsibility for the institution because you're the institution in some ways. Your name is on the fund. Your face is on the website. LPs expect you. If you leave, some of them leave. That leverage is real and entirely unusable because where would you go? That's the trap. That's also the privilege. You spend half your time fundraising now, calling LPs, visiting them, presenting the strategy, listening to their concerns, defending your returns, celebrating your wins. You raised $2 billion this cycle. That capital is yours to deploy. You're 40 and you're running a multi-billion-dollar operation in some functional sense. You have 2 kids in high school now. One plays soccer. You missed the championship game because you were in Singapore on a deal trip. Your spouse told you about it over Zoom. You saw the highlights. You were there for the awards dinner. You tell yourself you're present when it counts. You're not sure that's true. Your deal sourcing is different now. You're not looking for small add-ons. You're looking for transformations, platform companies, businesses that can build something. You source 3 deals a year on average. You deeply believe in each one. You've learned to spot the right founders, the right management teams. You know what wins looks like. Your track record proves it. You close a major deal. Your carry from this one will be 9 figures at exit. You feel the weight of 9 figures. You feel the weight of managing other people's money that will become your money if you execute correctly. You feel the weight of the team that reports to you depending on this working out. You feel the weight and you keep moving because there's no other option. The cycle doesn't stop. Level 7, the partner. You're 47. You're at the top. Not just of your firm, but of the entire industry. There are maybe 150 of you in the country who do this at this level. 150 out of 5 million people who work in PE. The compensation is almost irrelevant because it's so disconnected from any normal measure. This year will be $4 million in base and bonus. Your carry is in the tens of millions range from current funds. Previous funds already paid out 9 figures. Your net worth is substantial. Generational wealth. That matters and doesn't matter simultaneously. Your job is entirely different now. You fundraise, you invest, you represent the firm, you sit on the boards of portfolio companies, you mentor the MDs below you, you attend conferences where people treat you as if you're important. You are important. You've deployed $15 billion. Your firm manages $30 billion. You've made money for thousands of institutional investors. You've created thousands of jobs through your portfolio companies. That should feel like enough. Mostly it does. You're a partner, which means you own a portion of the firm itself. Your carry means you benefit from every deal the firm does. You're not just maximizing your own deals anymore. You're maximizing the firm. You're the steward now. Some deals you don't know intimately because the MDs below you handle them completely. That's how it should be. You review the major ones. You participate in investment committee decisions. You meet with LPs. You tell them where the firm is going, where you're taking them. They listen because of your track record, because your track record is the firm's track record. Your eldest is in college now. They study business. They haven't asked to work at your firm. You didn't push it. You know what this industry costs. You know what it gives. You're not sure it's a good bargain anymore. Not for them. For you, it was different. You had nothing when you started. Now you have everything. The path is visible. The price is visible. It's not a price you'd recommend, but you wouldn't change it. The deals still come. Your network feeds them. Your reputation magnifies them. A company you've wanted to buy for 3 years finally comes to market. You're first to bid. You win. The carry on this deal alone will be worth 11 figures at exit. That's real money. That's generational money. You invest your personal capital into it. $2 million of your own money. That's the firm requirement. Partners have to believe in what they fund. You believe. You know this company. You know the management. You see the path. You're going to make a lot of money, and you'll still keep working exactly the way you are working. The cycle doesn't recognize the end point. Right now, a 22-year-old is completing their final interviews. They practiced modeling for 6 weeks. They built LBOs on their laptop at 2 a.m. They memorized multiples. They learned to talk about IRR. They got the offer. They're about to start. They have a plan. 2 years, maybe 3. Get the brand on the resume. Exit to operations. Or maybe stay if the money is right. Clean, simple, sensible. They fly in Sunday night for their first engagement. The office is small. The hierarchy is closer than they expected. They check their email. They see the project assignment. They open their laptop. They start modeling. The deal doesn't care how old they are. The model doesn't wait. The cycles begin again and again and again.